Let's start your investment journey.
Hi and welcome to another edition of our weekly market outlook report for the week starting Monday, the 29th of March. We have a busy week ahead of us, however, shorter trading week due to market closure on Friday for Easter holiday. The week starts with Japanese unemployment and also retail trade data for February on Monday. On Tuesday, we should be on the lookout for Eurozone and also US consumer confidence for March. And going forward, Chinese manufacturing PMI figures, UK GDP quarter 4 data, Eurozone preliminary consumer price index for March, and US ADP employment change will be closely watched in addition to President Joe Biden's speech and US crude oil inventories on Wednesday. On Thursday, the main point of interest is reserved for Australian trade balance data, in addition to the US jobless claims and ISM manufacturing PMI figures. The week will finish on Friday with probably the most anticipated data release for the forthcoming week, which is US non-farm payroll data, unemployment rate, and average hourly earnings. Now, let's take a look at few markets. Let's start with the German 30 or the DAX index, which had a bullish breakout after this sideways consolidation. Key trading level going forward is at 14,740, cluster of these previous all-time highs. Pullback to that level and a rally higher, or a gradual continuation of this upside move, appear to be bullish, targeting additional resistance at 14,900. 14,950, 15,000 round number. Anything above that, your guess is as good as mine. Alternatively, if we see a pullback to 14,740 and a loss of that level, that could trigger a deeper corrective move, targeting additional support at 14,680, 14,600 to the downside, where the price could potentially meet towards this rising support trend line. Nasdaq appears to be a little bit more bearish. We have a sequence of lower highs. This appears to be a rising wedge. Key trading level for Nasdaq is at 13,000. As long as that resistance level holds and we see rejection from that level and a gradual move higher, in particular loss of these current lows at 12,770, retest of that level from underneath, that could trigger the continuation of this downward pressure, targeting additional support at 12,600, 12,400, 12,360 to the downside. Alternatively, if you see a breakout and end of day close above 13,000, that could trigger extension to the upside, targeting additional resistance at 13,100 and then in particular 13,330. Euro-dollar appears to be bearish. The current price is capped by multiple falling moving averages, 20, 50 and 200, and also falling resistance trend lines as well. Key trading level going forward is at one spot 1850. Rally into that level and a rejection or a gradual move lower, loss of these current lows, could indicate further bearishness, potentially opening the way for the extension to the downside, targeting support at 117.40, 117, possibly even 116.50. Alternatively, if you see a rally and a breakout above 118.50, that could trigger the retest of 190 and end of day close above one spot 90. 19 could possibly open the way for a gradual move higher, targeting additional resistance towards one spot 20. Cable appears to be creating an oversold bounce back here. X marks the spot. This is the key trading level for us. This is a longer term rising support trend line in daily and 4 hourly. This is previous support, now newly found resistance. This is current resistance, falling resistance trend line, and that level is at 139, 138.70, 139. It's a zone of about 30 points or so. Rally into that level and the rejection would be bearish, potentially targeting additional support at 136 135.80, 136, possibly even 135.60. Alternatively, if you see a rally and a breakout above that level, an end of day close and retest of that level from above could trigger extension to the upside, targeting additional resistance at 1 spot 40, possibly even 1 spot 41. Dollar Japanese yen appears to be quite bullish. The current price action is supported by multiple moving averages. We have multiple trend lines here as well. And this sideways consolidation triggered a breakout to the upside. Key trading level going forward is at 109, pullback to 109 and a rally higher. Appears to be bullish. Also a gradual move higher and a breakout above psychologically important 110 resistance, nice and round number, could indicate further bullishness, targeting additional resistance at 110.40, 110.80, 111, possibly even higher. Alternatively, if you see a pullback and a loss of 109, a retest of that level from underneath, that could indicate a deeper corrective move to the downside, targeting 108.60, possibly even 108. Lastly, let's talk about gold. Nothing changed here. Key trading level for gold is at 1750. An end of day breakout above 1750 is required for a potential spike higher, targeting additional resistance at 1775, 1780, 1800, possibly even 1820. Alternatively, if we see a rally and a rejection or a gradual move lower, a loss of these current support lows at 1720, that could trigger a deeper corrective move, targeting additional support towards the cluster of these lows at 1700, 1680, possibly even 1660. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.
Let's start your investment journey.